Good morning, my fellow traders. Hope you all having an awesome day. And I hope you all enjoying your weekend. And it was yet another great week so far. And if you're new to my channel and if you're already my subscriber from last couple of years, then you know that on the weekends video, I always try to give you as much as knowledge, education, the way I take my trades, what happens throughout the week, my trading psychology, how I take and cut my profits, my losses, some trades that are still running. I'm going to show all that to you in this weekend's video. So it's going to be really important if you want to watch the first part. You're going to learn lots of stuff. You're going to gain lots of benefit that will help you to take your future trading decision as well. They're going to help you in lots of trading psychology. So I highly recommend you guys to watch the first part of the video. If not, you can see the timestamp which you can skip directly to the analysis part of this video. Now, first, this was a trade that was set last week and the zone was sent to the members last week, which is right here that was shown last week, a week before this one. Now, I've already shown you that I've set two targets, one right here and one right here. This was the profit I've already taken and this was the trade that was still running. So either I would be out at break even because my stop loss was at break even, or the other scenario that will hit my take profit, and as you can see that has happened. So that is a benefit of doing a good risk management, setting your two trades with split risk. One hit you take profit, you're out. Second is still running with a break even of the stop loss. If that pushes up, I'm out. If not, that will be a double profits for me. And for the Euro AUD, I've shown that in the last weekend's video. That was a trade where my first take profit was hit and second just cut me out and break even. So that is a good way of doing risk management. Now, everyone has their own style. You can also trail your stop loss by using the EMA. So there's lots of things you can do, but make sure you are not cutting your profits early. Now, when I do my technical analysis and when I take my trades, I do lots of analysis. I check lots of risk factor because I place my hard-earned money. I just don't go to the markets and just click sell or buy, looking at the market is so high, selling at the highest point and buying at the lowest point. No. If the market is trending lower and if the market is really low, I still sell, but with the pullbacks. There is a rule for that, and that is what makes the profitable trader different from the other losing trader. The losers, they are just trying to capture the high or the low, but the winners, they are trying to carry on with the trend with the pullbacks. Now, this was the trade which I've taken right here. First, the pullback entry happened here, which I've taken. And then we had this news scandal, GDP data of the US. And that was projected to be bullish. Means we can sell GBP because we are buying dollar. And the technical signal happened right here. So both were in my favor. That is why I've sent that as a trade alert. Now, if you look here in the description right here, that I've already taken an earlier trade with the same pattern. If you look at the previous bullish pullback setup. Now, it is a setup that I teach my students with the full rules. If you know these setups, you don't even need to wait for my signals. You get a setup, you take your trades, you look at the market, you feel it's good, you take it. Now, my job is to teach you the system, and now your job is to backtest it. Learn it, look for the A+ setup and then take your trades. At least you're not trading blindly. Then we have another entry forming after the creation of a new low. This trade has some risk, additional risk, because there's a key US and GDP data release ahead. However, if it moves in our favor, it is likely to continue in our direction. So that is my risk calculation, risk management. First, we have a technical bearish signal for for GBP, means the USD gonna get stronger and GBP gonna get fall. So that was my first analysis before I entered this trade. Then I've looked on a daily time frame. We have broken below, right? So for me, the direction is towards the downside. And I've also mentioned that we have already taken one pullback entry, exact same pattern. You look here, right? Exact same pattern. I've taken it. I didn't hesitate because that is my tested pattern. So this was not sent as an alert because it is not a signal group. I want you guys to learn from these groups. There are lots of signal groups giving you buy and sell signals, but they don't teach you why and when they are taking the entries. You don't even know if these signal groups are real. They're going to buy signals from someone else and then sell it to someone and taking money from you, right? But I want to teach you the logic behind these markets, not just buying or selling at the lowest or highest point. So we had this bearish engulfer and the news goes in my favor, how nicely it pushes down. And my target was bit higher, 1.821, not blindly, because I want to capture the lowest point right here. That was my lowest point to capture, this low. I could have managed till here and that would have easily hit my target, but because it was a news candle can sometimes deceive you by pushes down and then leaving the wick and then pushes back up. So that is why that was also in my mind. I just kept my targets till here and exit my trade quickly. So 2 trades right here, and those 2 trades I already teach to my students the way you enter the trade. So that is a beauty of doing risk management, your technical analysis. Before you place your trade, you look at the market, you look at some news factor, you look at technical factors, you look at EMS, you look at A+ setup, you look at overbought, oversold in the market, and then take your trades. Now, talking about overbought, oversold, selling at the highest, buying at the lowest, that can get you stuck in the trade for long time, and you can just be in the stress. Now, a good example of that is, like I mentioned, next month in November, I'm putting the course for this strategy. And the reason I'm showing you and placing these trades in the live sessions, because I want to show you, to prove you that we are taking this trade in the real time. We are forward testing it. We are taking these trades. I'm showing you how these patterns are playing out. I would say the results are insane till now. Feel free to watch every single weekend's video. You will find out these patterns. And if you're a member, look at the live session where we place these trades. The results are insane. So I'm going to put that in the course soon and with the exact rules, so that you guys have nothing to worry about, no guesses there. Now, like I said, I trade on 1 hour and 4 hour time frame. So this was an entry taken on 1 hour where the breakout was already happened. I mentioned that we had a breakout and all we are looking at to enter this trade. So that's a breakout already. So looking at that, expect a further continuation. So if I would have entered this at the breakout, that would be my entry. This pair has a very high volume at this point. So yeah, that would be my entry on 1 hour time frame. We'll see how that goes. But for the pullback entries, the ones you're already familiar with, look for engulfing candles to go long. And there was no ifs, there was no buts. The breakout was there. I've said the breakout has happened. And if you look here, that was a breakout candle, a solid candle, not a wick like this. And then we enter the trade. Now, how many pips do you see here? 102 pips. And then I've sent an email notification to the members to come out of this trade, because it is very important to cut your profits, because you are not going to get greedy. Yes, you could have managed your trades by trailing your stop loss below the EMA. Now that's totally up to you. Whatever I do, I send that in the group, and then it's up to you, your own choice, if you want to come out or not. But that could have been managed till here. But for me, that is enough. Now, I've also mentioned one more thing, that is an aggressive entry. If you're not an aggressive trader, look for your pullback entry bullish. For me, we had a pullback entry bullish. So I've entered one more trade. While this trade was running, I've entered another trade, means I've scaled in one more position, because that was a breakout entry still running. We had a pullback and engulfer. Then that was a sign of relief that yes, we had an entry condition. Now if you look here, the price is already so overbought, and the mistake traders do, they look at the red candles, they start selling here, and then what? The market just pushes up. But us trader, the profitable traders, the trader who know the rules, they see the condition. After the pullback, the profit taking happens. Then we are looking to buy again. And that nicely hit how many pips target? And other 57 pips target. So altogether, 150 pips target has been hit. That was sent as a notification to the members. Now, lots of members get confused, because I know lots of you guys, you're not looking at the live session. Please guys, most of you, I would say 95% of you, the members, they have access to the live sessions. Watch the live sessions, watch the trades I'm mentioning there. And you see there are so many trades I'm mentioning there if there's conditions. If you're missing all the live sessions, then you're not getting anything. So most of you have access, please watch these live sessions. So what do you learn here? You have learned a breakout entry happened on 1 hour. Right? The price is pushing up. Then we have a pullback entry for less aggressive trader right here. And then we entered one more trade, and that hit the take profits as well. And right here, this was an email sent to my members that I've just closed my first breakout trade with 100 pips. Then I took a second trade with our favorite pullback entry in total of 150 pips. And if you have already in this trade, feel free to manage it or close these trades. If you have not closed it, you have managed it. But if you have closed it like me, I've closed it right here. And then same goes with AUDNZD. And that is something which is coming next. So that is how we take the trades. That is how I sometimes give a shout out to my students or my members as well to come out and take your profits. And then same goes with AUDNZD. What a move we have got with the symmetrical triangle breakout. And if you look here, this was an entry I've also mentioned. With the breakout candle here, we have an entry right here, which I've not taken by the way, but that would have played out perfectly fine. So let's see the clip from the live session so that I can see where and when we entered this trade. Now we have a pattern here, a symmetrical triangle here, this one as well, and let's see where it closes and where it breaks. Above will be my buy and below will be my sell. Buy will be good because we are trending higher. So we'll see where it breaks. Keep an eye on AUDNZD as well. Perfect. So that is the power of and learning the right rules. With a nice breakout, that would have hit a nice take profit all the way from here till here. That was 83 pips push up. Now you see, just getting into oversold right here doesn't make you sell the market. Instead, the market blasted up with this green candle. Imagine if you have sold here with looking at the market is overbought, then that would have eaten all your money. So that is why rules are there, stop loss is there. If the things goes wrong, you have a stop loss. Now, like I say, make sure you are looking at the live sessions. Make sure you are looking and listening what I'm saying. That is why you are in this group to learn, not for signals. Now, in the group, I mentioned that look for your entries. I tell you my bias, bearish or bullish. First, let me show you the clip from the live session. Then I'll tell you how we entered this trade. And the cat, we are only selling but with pullback entries. Of course, you guys know, not a valid entry in case you're wondering. So we are only looking for the pullback entry, bearish for NZD CAD. So we have whole week ahead. Be patient, wait for the setups to come, and only then we are taking the trades. Perfect. So I've said that, be patient, wait for the setups to come to you, and with the pullback if the bearish condition forms. And right here, what do we have? Bearish engulfing candle. That was valid on my platform, on FXCM and on IC market. A valid bearish engulfer happened. And right here I've entered. Like I said, that we are looking to enter the trades if there's a pullback with bearish condition. Clearly mentioned in the group. If you're learning, watching it, then you are the few percent of the traders who are getting ready and who are on the right path of becoming a trader, not who just come here for signals. Signals can never make you rich, but you're just making your brokers rich or the signal provider rich. So that is a trade, an entry mentioned, and that nicely played out. Now talking about breakouts, I want to show you one more trade that I've taken, and that is right here. Still not hit my take profit because this is the opposite trade I've just shown you of AUDNZD. Opposite entry, bear flag pattern right here, 2 touches here, not a solid one, but that trade is still running. And my target is set right here. I've kept my stop loss at the highs right here and take profit exactly 1-to-1. Initially, I might manage to the lower levels, but that was the exact same trade I placed in the live session with a breakout entry, which is pushing down. Lots of pain here, lots of patience, and that is something we call trading. Patience, discipline, not cutting your trades, but just by looking at the profits. And these are the moves that can test your patience. You're in the profits, you're in the loss, you're in the profits, you're back in the loss, you're in the profits, you're in the loss, back in the profit, back in the loss, in the profit, and now you're in the profit. So you see the roller coaster ride. Because you're earning, you're taking money from the markets. But if you're exiting your trades again and again early and taking your loss bigger, then you're never going to make it in the trading and you will give up on trading soon. My reason to come here every weekend, spend my time, do lots of research on my previous videos and make single video for you. It takes me 6 to 7 hours to make this video, edit this video, and then upload it. So I hope you guys are learning from this. And I hope you are gaining some knowledge, a free knowledge, which honestly I'm trying to give you here on YouTube. The entries I teach you, that was an honest entries I teach you without forcing you guys to buy the course. But the courses are there if you want to learn the full systematic way, by basics to the intermediate to the advanced level. So that is something that will cut your learning curve. So this was one trade that is still running, and one more trade which is still running. It is right here. A good example of a trade that is a double bottom break of the previous structure. We had a double bottom right here with engulfing candle, and this trade is still running. Now I've entered 2 trade, one with 1%, second with another 1% of trade, but this is the bigger. It is 1-to-1. This is 1.4 to 1 reward to risk ratio. So once this take profit is hit, if that happens, I'll be out taking this profit, and then I'll move my stop loss to break even, and we'll see if this take profit is hit. Then 1-to-1 is here, and then 1.4 to 1 reward to risk ratio is there. So how perfect you can do your risk management like this way. Just getting this money in your pocket so that you're mentally relaxed that you have at least made some money. But if the price pushes down, at least you're losing on one trade, but you're still making your 1% of the trade. And then you can manage it wherever you want to manage it. This was the trade that was mentioned in the members only video. If you're my YouTube member, that's only £5 or $5, then you also get access to these videos. So let's see the clip from the members only video, then we can connect the dots from there. One forex pair. Now we're getting this possible double bottom pattern. If this closes the bullish engulfing pattern, I'll be taking this entry. That's going to be very risky entry, but just to show you what entry I'll be looking at for my own trading. Keep an eye, and I'll keep my ATR below the wick and go 1-to-1 initially for my target. Perfect. So that is something I want to show you as well. It is still running. Don't enter this trade. It might not work. It might not play out. And your risk to reward will hinder. It might hit the take profit and pushes back down. If you enter right here with the greed, with the FOMO, then trust me, that's not a good idea. But if you have already entered this trade, totally fine. This is my target. That is how it looks like. Finally, we have a forex pair, AUDUSD. Now, in the report, I've mentioned that this pair broke above the trend continuation zone and we are now inside of this zone right here. I'll be looking for the possible entries once the condition forms. Now, if you're not taking the profits, as you can see, the price pushes back down and continue to push down the trend. Now, the goal is to get the profits from the bounce in the downtrend from the zones. Then the price can continue or reverse, but we are out at the right time. So let's see the clip from a live session, then we can connect the dots from there. On 1 hour, we have a double bottom. So that's a double bottom on 1 hour with a pin bar, aggressive double bottom. So on 1 hour, that looks like this. Let's see how it performs and how it goes. Perfect. So as mentioned and set this entry in the live session, that nicely hit 1.421 reward to risk ratio target. That is a fixed target as sometimes used from the zones. And as you can see, that nicely pushed up and then pushes down. That doesn't harm me because I'm not in this trade anymore. Cutting the profits is very important as well. So that's all for the first part of the video. We are still waiting for the commodities to get into zones and play out from the zones, which we might see next week or week after that. But that is what we call discipline and patience and waiting for the price to come to your setups. And that is how we should be trading. So let's start the second part and let's do the analysis of net gas, gold, silver, crude oil, starting with natural gas. I'm going to start with capital.com because the price rolled over on NEMEX and pushes up. Before I mention the conditions, I want to mention something. Now, as you can see, the price opened above in gap on NEMEX. Now, here on spot or continuous contracts, the price might match up with the NEMEX future prices. Now, with that, it might open above in gap here after the weekend, or when the market opens to catch up with the price of the futures. So if that happens, then the technicals will be different, and in that case we can look for the solid pullbacks and engulfing pattern just to go long. In that case, we have a new high. We are only looking to buy this market, which I'll be talking about in details when I get to the NEMEX part of the analysis for the future traders. So that is something to keep an eye when the market opens, and there's a chance that market will open above in gap to match up with the price. But if the market stays below, open down in gap, then the condition I'm going to mention next, it is something I'll be looking at throughout the week, and this pattern I'll be explaining in this video. Now I want to give you a heads up here. On a high time frame, we are still bearish. As you can see, the bearish candles, bearish engulfers, and we are also getting this bearish pattern on a high time frame. Now on weekly, we are below the EMAs as well. I take my entries on 4 hour. Now price just formed a head and shoulder bearish pattern right here, and that goes exactly till here. We have got a rejection from the right shoulder. We have a clear termination zone right here. We have a clear head of the pattern, left shoulder right, a reversal pattern, and we are now heading down from the termination zone, and we have this bearish engulfing candle that nicely pushed down. Now if you are my student, you know these entries. Now I've also mentioned one more entry, a pin bar entry that was forming right here in my last video. If you are my student, then let's say your entry here, bearish engulfing entry that happened on NEMEX, which is right here, didn't play out, and the price pushes up, hitting your stop loss, right? And if you look here, if you would have entered right here, that would have hit your stop loss with this wick. Mean you're out with this wick. And then what happens? After a couple of candles, you have got this 382 candle. Now this is the exact entry I teach in my course. You have re-entered this trade after the stop loss is hit, and then that would have covered your loss, and that would be a gap up opening as well here, but we have an early signal of entering this trade. So let's see the clip where I mentioned about this entry. I have to look for my buy trades either with my pin bars, 382 candles. My students know that entry as well. And one is right here. That also shows a bullish pressure and short-term push up out of natural gas. If broken above 50 EMA again, in that case, I'll be looking for a pullback entry bullish. Nice one. So that is how you do the trading. If one pattern didn't play out, you have a second pattern that played out. But for me, it played out perfectly fine, which is my pullback entry bearish. Right here, exact entry which I look for Oanda, and that nicely hit my profits. That was also mentioned in my trade alert that was sent to the member. And then we have a pin bar happened here that also pushes up. So that is something I want to mention here, the way you can take your trades. Now with this bearish pattern, there are two things the price can do. One, a break above this high, and it can go up to the recent high and form double top to fall. But looking at this rejection, I'm expecting a push down to the termination zone right here. A push down back to the termination zone here. And if we are broken below the termination zone, we are in the second phase of entry that will push the price further down. Remember the head and shoulder pattern bearish on a weekly time frame. I also want to mention that here. Left shoulder, head, right shoulder, push down, break of termination zone, push down, and we're getting a minor head and shoulder pattern. We can see a push down, break of this zone, and further push down. So for now, I'm not completely bullish for natural gas. Yes, the weather can change the moves of the price, but if there is no conditions, there is no entry. But I'm giving you a general bias here without a condition. General bias means discretion of the trading. Now my general bias is the price is likely going to push down here back to the termination zone, and we can see a possible rejection, consolidation, and break below will confirm the further downside move to the next level of support. So I'm not buying, but I'm expecting a move down, completion of the right shoulder and till termination zone. I will be only buying once we have broken above this high and close as well. Only then the trend of this market will reverse. So I'm mainly looking at technicals because I've been trading natural gas from couple of years in December, in the winters, and if the technical condition forms, the price is expected that most of the time. So I'm expecting a move down here. If broken below and closed below, we can see a further fall. Buy if you want to buy. If you ask me when to buy, let the price break above these highs, close solid above this high, then we are looking to buy this market. For now, I'm not buying. I'm only looking to sell and expecting a further fall out of natural gas. Now, here on Oanda, we are above 50 EMA. There's a chance the price can hit the trend line and fall back down. So expect a short-term bounce, short-term moves up, but once we are broken above these highs and the trend line, short-term buy trades engulfer to go long. So break of the trend line, in that case, we can look at the short-term buy trade with the pullback. 180 a target, come out, exit. Break above this high will confirm the further upside move. So we are still not completely bullish, but here there is no clear head and shoulder pattern. But we have a double top pattern. Let's make it clear. First top, a pullback. Second top, a break below the low. This could be a retest of the neckline of this double top. A bearish engulfer happened right here that can still push down. So that is why I'm only looking at the bearish sides, not at the bullish side of natural gas. Again, no conditions, no entries. In general, I'm expecting a price to push down to the green zone. Buy will only happen above this high, and I will only buy with break above pullback and engulfing entry condition. Now on NEMIX, the price rolled over, pushes up. Now for me, if you're trading on NEMIX, if you're looking at this chart, we are above 50 EMA, we are above this high. It is very simple. If the price forms an engulfing candle above 50 EMA after the gap is filled, that is likely. And in that push down, you can see a push down to the termination zone on the other platforms. So that is why on this platform, I'm just looking for the solid pullback, 50 EMA, a possible gap fill as well. And if the price form an engulfing candle, then we can go short term long. And here I want to see a break above this high and then a further continuation towards the upside. So that is something I'm expecting on NEMIX platform. And on MCX, exactly the same. You need to look for the pullback, and if there is an engulfing candle above 50 EMA, we are just going long. So conditions are different on different platforms. Wherever you get the conditions, you can take your trades according to your own platform. So I've given you the conditions on NEMEX, on MCX, on Awanda and Capital.com, and your job is to find the conditions and entries. You can always ask me the questions. Next up, we have gold is pushing up and the price is still intact. Not a valid entry in case you are wondering. Now, at this point, I'm expecting another hit of this trend line and then a fall. So I expect a push up from here. No conditions yet, but we have this 382 pin bar. We have 382 pin bar, an early push up signal, and that has pushed up. So I'm expecting a further push up out of gold and expecting a push up to the trend line, the upper trend line. But for the pullback entry, I want to see a pullback to this green anchor or above 50 EMA with engulfing candle to simply go long. Very simple and very easy. Now on gold, if you look here, right here, what do you see? A breakout of the flag pattern as well. A solid breakout in an uptrend exactly like this. I've mentioned that right here and right here. So a nice breakout has been happening here. A flag pattern, a bull flag pattern, a bull flag pattern. So that is what we can see. A breakout happened here and we can see a push up at least to these highs first and then a push back down. So very simple. We are bullish for gold and expect a further continuation out of gold at least to the upper trend line. For the pullback entry, of course, you know, a pullback to 50 EMA follows engulfing candle. What a big move we have got here on silver. That was not a blind trade. Let me show you the clip, a public clip where I mentioned clearly, free for you, that we have an entry and how nicely it pushes up. Both aggressive and less aggressive entries played out. Now that is my new zone, and in this type of condition, I just look for my buy trades. Now, there are two ways of entering buy trades. One is my pullback entry, of course. Second is my aggressive entry. Fib entry is right here to the upper level, and I'll be looking for the pullback to 50% retracement. Again, after the GDP data released, that we can see that accordingly. But 50% retracement can be buy limit order, 382 retracement, then take profit 1786 and 1.618 retracement for the bigger target if you want to manage your trade. So that is aggressive entry, otherwise pullback entry bullish. Above 50 EMA, wherever we get that, I'll be going long. Awesome. So that is what we call patience and taking your trades with condition, with the right rules, with the breakout. And this is the entry I teach my students in the course with the full rules, not blindly. And if you are my student, you know how we have entered this trade. A nice pullback that was also mentioned in my YouTube videos. Hit of 382 retracement right here. Now, if you have entered right here, if you have taken the risk in trading, you have to take a risk, but it must be calculated right here. Direct hit of 382 retracement. Take profit is here and stop loss is below this pattern. That is 1.921 reward to risk ratio, and that is a big move of 1800 pips here in silver. That is what we call a trade. And then what happens? The trade I've taken, not an aggressive trade, because I don't take aggressive entries on silver, especially. I've taken my pullback entry. Now, if you're not an aggressive trader, that is an entry I've taken. And for me, that was just a 400 pips of take profits. Now, for me, that is enough. I've taken 1-to-1. I have not managed that. But that was a big candle. I could have taken that, managed that. But for commodities, I normally go 1-to-1, and then it's up to me if I want to manage it. The market was so overbought, that is why I was not comfortable to manage this trade. So a good trade happened here, and we have taken the profits. What to expect next? I'm expecting a pullback. Again, a pullback and a breather, a correction, and engulfing candle, simply like this, to go long until where? Till the price get to my next level of resistance, which we are heading to shortly. 47.76, that goes up to 48.96. A major structure where price is now heading to. Right here, these numbers in blue, you can mark that on your charts. For now, until then, I'm only looking to buy this market with pullbacks and engulfing candle. Now, I'm expecting a good correction from here as well. Correction engulfer to go long, that is fine. Now, I'm also looking at gold and silver ratio. At this point, gold and silver ratio is approaching the major structure. Means if the price pushes down a bit here, it will push up on gold and silver a bit. And once the price reaches this zone, you can see a solid push up and a solid push down from gold and silver. If you don't know how to trade gold and silver with ratio, I've already made a video in the playlist. Watch that and learn that. So once the price hit the support in silver and gold ratio, it will likely give you a solid pullback, another opportunity to buy. And with engulfing candle, we are just going long. So keep an eye. That is what I'm looking at here on silver. Finally, we have crude oil. Now, I mentioned clearly that we have a room here from here till here. How many times I've mentioned that if you follow me? Every single video. Let's see the clip from the last video where I've mentioned about these entries. But you can also get some consolidation here within this area, and we can see a possible bounce up from here back to the upper level from where you can see a possible consolidation above. But if there is a bullish engulfer here, in that case expect a short-term bounce and a range within this area. Got a bullish cross here, like I mentioned in my last video, that we can expect a further continuation. So very simple and very easy. It's just a pullback above 50 EMA to go long. 180 for the targets, and I'm expecting a max move to these highs because that is a range area, and in this area we are only taking buy trades. From here we have took the trade, and now we have broken above 50 EMA. If you have pullback entry bullish, we're gonna go long again till here, but initial targets will be always 180. Nice one. So that is how we take the trades, do the analysis. We knew the area of the range, and that is what we taken an opportunity to buy here within engulfer double bottom that nicely pushed up. So if you have noticed this pullback entry, my student have of course a swing low pullback entry bullish. Now you can't miss it because you know the rules, and the YouTube audience, you can't miss it as well. If you have, then you need to watch my videos carefully. A pullback entry bullish, exactly pushed up, hitting the targets easily, like I mentioned, pullback entry, and then it stalled, and then it forms a bearish candle. That is what we call conditions, and taking your trades with patience. And then it rejected exactly from my zone, exactly the range I've marked. We have a bearish engulfing pattern. We had the 382 pin bar. Now that is my entry short term. Now that is a minor zone. It might not play out. It might play out. So in this type of entries, I keep a stop loss above the wick ATR, and one stop loss smaller and one take profit smaller. First take profit will be 1 ATR only, which is 59 cents or 60 cents. And then second take profit will be the stop loss above this high, and take profit can be exactly 1 to 1. So that is my bearish aggressive entry, and we'll see how that goes. For less aggressive traders, you can also look for that double top pattern to go short. That would be a safer and going to be best entry. So for now I'm expecting a pullback, a nice breather out of oil. I'm only buying oil once we have broken above this high for the further trend continuation. So that's it for today's video. Hope you got a value, and hope you've learned something out of this video. If yes, hit a like button for me. It really helps me in the YouTube algorithm, and hope you trade green. I'll see you guys in the next video. Till then, take care.